Let's begin with a look back at Wall Street analysts' initial predictions for the stock market's performance in 2024, how stocks actually performed in 2024, and some of the factors that drove that performance. Before discussing Wall Street analyst predictions, let's examine some important inputs that may impact the stock market's direction in the coming year. As many of you know, corporate earnings may be a key driver of stock market performance in 2025. According to FactSet, a leading financial data and analytics firm, earnings are expected to continue trending higher in 2025. While that's a good sign, it's also difficult to say how much of that earnings growth expectation has been priced into stocks, especially in light of their current valuation level. Estimating quarterly earnings is difficult, but such estimates can help guide decisions about what price to pay for a stock. If earnings are healthy, it may support higher prices. Conversely, should earnings come in short of expectations, it may put downward pressure on stock prices. It's important to remember that forecasts or forward-looking statements are based on assumptions, subject to revisions without notice, and may not materialize. If we've learned anything during the past couple of years, the outlook for financial markets can change quickly. Fed's decisions about interest rates may have some influence on stock prices in 2025. One tool traders look to understand where rates may be heading is the CME FedWatch tool, which analyzes the probabilities of future target rates, as implied by the 30-day Fed funds future pricing data. If we look at where the market thinks the Fed is going, we see the market believes that there is about a 45% probability of the federal funds rate falling by 25 basis points or a quarter percentage point by the end of June. In late December of 2024, the Fed funds rate was 4.25% to 4.5%. Traders also see a 28% probability for rates to remain unchanged within the first 6 months of 2024, while there's about a 22% likelihood of percentage point cut. There's only a 4.4% chance that rates will fall 3/4 of a percentage point and less than 1% chance the Fed will cut rates 1 full percentage point by mid-year. The Fed signaling in Q4 2024 of a more cautious or hawkish approach to rate adjustments means the next 6 months may be quite different than the past 6 months with respect to Fed policy. Keep in mind, the CME Group's table changes daily. Probabilities are based on assumptions and are subject to revisions. Financial, economic, political, and regulatory issues may cause the actual results to differ from the expectations expressed in the table. The data from this tool does not constitute investment advice and is not a personal recommendation from the CME Group. Economic forecasts surveyed by Philadelphia Fed in the fourth quarter updated their outlook for Q4 2024 and all of 2025. They substantially increased their expectations for Q4 2024 real GDP growth to 2.2% from 1.7%. In 2025, they anticipated positive growth each quarter and are forecasting 2.2% real GDP growth overall for the year. So at this point, no recession appears in the forecast. Interestingly, their unemployment rate projections remain essentially flat throughout 2025, with only very slight upticks in Q2 and Q4. It will be interesting to see how or if economic growth influences the unemployment rate. I've said this before, but it's important to remember that forecasts are based on assumptions and subject to revisions over time. Financial, economic, political, and regulatory issues may cause this result to differ from expectations. From interest rates and inflation, one of the most critical factors that may decide how the economy and the stock market do in the new year is the health of the consumer. Consumer spending represents about 2/3 of the American economy, and if consumers pull in their spending in 2025, it could have consequences for the markets. As we can see in the chart, the amount of liquid wealth has declined over time, while credit card delinquencies have trended higher. Will this combination of shrinking liquid net worth and rising credit card delinquency influence consumer spending habits? That's difficult to answer, but consumers have been known to surprise the experts. Among the biggest questions investors have heading into 2025 are, at which meetings might the Fed adjust interest rates? And does the Fed still see inflation as a concern, or has its focus shifted to unemployment? As the Federal Reserve strives to meet its dual mandate of maximum employment and stable prices for American people, in 2025, the Federal Open Market Committee, or FOMC, meetings are where those decisions will be made. So, what are the major financial firms forecasting for domestic stock prices in 2025? Analysts are predicting a relatively bullish year for 2025. However, unlike the past 2 years, you'll notice a tighter range in these forecasts running from 6,500 to 7,000. The S&P closed at 5881 on December 31st of 2024. This tighter range of sentiment may be attributed to a variety of issues. Will geopolitical tensions hold back market momentum? Will the Fed continue to adjust rates or tap the brakes until it's more confident that inflation is under control? Will the economy see a soft landing or slip into a recession? And how will corporate reports look in 2025? While these were all issues that strategists wrestled with in the past, there seems to be greater optimism and less divergent opinions. Remember, this image includes a forecast, so it's important to remember, again, that forecasts are based on assumptions and are subject to revisions over time. Financial, economic, political, regulatory, and in this instance, health issues may cause the actual results to differ from the expectations expressed in our discussion with a word on the importance of investment discipline or sticking with your investment strategy. The potential of stocks to help build wealth over the long term may be challenging when investors move in and out of the financial markets. If we look at this image, we see direct correlation to the probability of having positive gains in stocks with the time such investments are held. So for instance, over the last 96 years, 73% of all one-year periods had positive returns. However, if we travel out to longer holding periods, we see the likelihood of investment success rise to 84% for a 3-year period, 88% for 5-year periods, and 94% for 10-year holding periods. In this illustration, stocks are represented by the S&P Composite Index, and a managed index considered representative of the overall U.S. stock market. What can you do in 2025 to move closer to your goals? Here are some action items. If your life or personal situation changes, keep us in the loop. We want to hear about the important family events like births and deaths. We care also about health issues, employment changes, and any financial developments that may change your situation. If you find yourself thinking about new goals or reevaluating your priorities, share your thoughts with us so we can help you pursue the life you most desire. On top of specific adjustments in your financial life, we also want to know how you feel about investment changes. These could be details like risk tolerance shifts or market environment concerns. Finally, review your estate documents, beneficiary designations, and other paperwork to ensure they're all up to date. A well-organized estate is one of the best gifts you can give to your family. We're here to discuss any financial questions or worries you may have. Throughout 2025, we will focus on delivering the following. We'll keep you informed through regular communication. We'll manage your investments according to your personalized strategy, and we'll remain abreast of economic factors and adjust accordingly. Thanks for reviewing our slides today. As you can tell, I'm passionate about helping you understand the markets. For more information and timely updates, please follow us on social media and contact us at any time. We hope you enjoyed the details that we shared.